Hello, welcome to Neppy Invest. In this video, I'll be talking about Livetiles. It's a company I've been following very closely, and I'm trying to find a good place to buy them if I do buy them. And they are getting very close to what I call an inflection point where they're sort of realizing their potential. And once they realize that potential, usually you see the share price just fly up. So the biggest thing that's been holding Livetiles back is just the costs. So they've got pretty good cash receipts, revenue, annual recurring revenue, but it's just the costs. And they've been trying to pare back those costs, and we're starting to see a bit of traction in that. And they're starting to there is signs that they're getting really close to an inflection point, and the share price is also showing signs of turning around too. So becoming very much more interested in Livetiles, and I'm keeping a hawkeye close eye on their company's fortunes moving forward. So let's have a look at their Appendix 4C for October 2020. So this is so they have a market cap of 220 million, so it's not as much as it used to be. It has dropped a little bit. Receipts from customers are quite healthy, $12 million, and they're only burning cash of 2.5 million. So you might say only 2.5. Yeah, it's been quite a bit higher than that in the past. So they're starting to really decrease the costs of the company, which is a good thing. That's something that's on their minds. We've had problems with other companies in the past that I've followed that they just didn't realize that costs are if you have high costs, it's a big negative if you don't have the cash receipts and the cash flow coming in the door. Funny that, huh? So this is their cash receipts history, and we've seen a very good uptrend through the last, say, 3 years. So October 2017, we had $1.1 million in cash receipts. Now we're up to 12 million in cash receipts. So very healthy upward trend. And even though the upward trend has decreased a little bit, or the progression's decreased, or the percentage increase from quarter on quarter has decreased a little bit, it's still going up, which is always a good thing. So I mentioned already that they do have a lot of costs. So I've mentioned here they're a cash burner. You can just see that in the yearly cash flow. So this is their consolidated statement of cash flows 2019 and 20. You can just see the net cash used in operating activities. In 2019, they burned in operations cash to the tune of $33 million. So that's a lot of money. And they've pared that back. So in 2020, instead of $33 million, they only lost or burned cash to the tune of 9.2. A lot of that is just increasing in receipts. So they've increased receipts from 19 to $40 million. So you can see this company has been a traditional cash burner of capital, and they're starting to try to pare that back. So annual recurring revenue is $57.1 million, or $61.7 million in constant currency. So the way I look at this is if you times the annual recurring revenue by 10 times, that gives a rough estimation of a fair value of a SaaS company, and that gives a market cap of $570 million. There are substantially lower than that. It used to be, excuse me, they used to be quite a bit higher than that, but I think because they were a traditional cash burning company, the market became a bit suspect, a bit hesitant to buy into Livetiles, and that's why the share price has pulled back quite a bit. They do have $34.6 million in cash. You see the annual recurring revenue growth has been quite good through the years. So this is yearly growth, and that's quite good yearly growth. So that should back up a fairly high valuation for this company. This is this trailing 6-month positive operating cash flow. You can see if you go back to the 6 months from quarter 1, quarter 2, quarter 3, financial year 20, they were burning through a lot of cash. In the last few quarters, they've really started to reduce that cash burn, which is a good thing. They're really focusing. Seems like they're really focusing on that cash burn, and in fact, the last 6 months they've actually cash flow positive, which is good in operations. That is. So this is the share price for the 1 year daily. If you go back a bit further than this, the share price was a little bit higher than this, but we're starting to see signs, potential signs of a turnaround in the share price the last few weeks or the last week or so. But generally, it's been in the downtrend, and I'm just waiting for a confirmation of a turnaround in the share price or confirmation that the company has become cash flow positive, something like that, just a bit of a turnaround sign in the company's finances or the company's share price, and that would be the time to buy. So that's all I got on Livetiles for now. I hope you enjoyed this video. If you're a shareholder, leave some comments, because this is a company I'm keeping a close eye on, and I'll keep a close eye on for the foreseeable future, or until something negative happens or something very positive happens. And hopefully for those shareholders, it's something very positive. Again, I'm not a professional advisor, so if you do need to seek out professional advice, make sure you seek out a professional, someone who's qualified. I'm not qualified at all. I just have opinions, and all these videos have been done just for my own research purposes and to entertain or educate people. So have a good day. Talk to you later. Bye.